A massive inventory spike is hitting Texas and Florida right now and causing these local housing markets to collapse. The values in many cities in Texas and Florida, they're going down fast, and they're going down way faster than you would believe. Like for instance, on this listing on the south side of Dallas, it's a 3-bed, 3-bath listed for $487,000. However, the value estimate on this house from Zillow has collapsed by $120,000 over the last couple months, down 20% back to its level in mid-2021. And to be clear, there's more declines coming in Texas and Florida into the future, but what you got to understand is if you're a home buyer or a seller there right now, this crash is happening in real time. All of the markers, all of the indicators are there, especially given this inventory spike that we are seeing in both states. Because I want you folks to take a look at this graph. The yellow line is showing the inventory levels in Texas and Florida combined. And you can see we have 250,000 homes on the market in Texas and Florida right now. That is the highest level of inventory in Texas and Florida that we've seen going back to 2016. So highest supply in 7 years in Texas and Florida, and it's going up like a hockey stick. But take a look at this blue line, everyone. I want you to compare Texas and Florida to the blue line, which is the inventory in the Northeast. Folks, the inventory in the Northeast is still minuscule to non-existent. In states like New York, Massachusetts, Pennsylvania, Vermont, and New Hampshire, there's only 90,000 homes on the market compared to 250,000 homes in Texas and Florida. So there's literally 270% more inventory in Texas and Florida than the Northeast, when before the pandemic they were basically the same. And so this points to the bifurcated nature of this housing downturn in America right now. This is not happening everywhere, everyone. This is happening in Texas and Florida first, because Texas and Florida were the big pandemic boom towns where the prices and the rents just went way out of control. All the people from New York and California moved in and paid in cash. All the real estate investors came in. All the home builders came into Texas and Florida. And now that we're in the down cycle of the real estate market, we are seeing all of those things that pushed Texas and Florida up during the boom now cause a crash. One by one, just so you understand it. The builders who pulled all those permits, well, now those homes are getting pushed onto the market for sale. The investors who bought up those homes, well, now many of those investors are selling. Those people who moved in from New York and California, now many of them are moving back. They got called back into the office because their company isn't doing remote work anymore. And so we are seeing the downturn hit, and the downturn hit hard. I want to show you right now, folks, the cities where the downturn is hitting hardest, not only in Texas and Florida, but also these other parts of America here in red. We're going to explore the cities where the inventory has spiked the most over the last year. We're looking at data on Reventure app right now. You guys should go to www.reventure.app after this video and look at the inventory trends for your city, but hold off, don't do it just yet. We're going to filter the population here to a minimum metro size of 250,000. And now we're going to look which areas have had the biggest growth in inventory over the last year. And you can see number one is actually in Washington State. It's Bremerton, Washington. 94% growth in inventory. This is a smaller metro area, but if we head down this list, you can see what comes in at number two. Tampa, Florida, everyone. Tampa, Florida, 16,000 homes on the market. A year ago in Tampa, everyone, we only had 8,000 homes on the market. Now we have nearly 16,000, the highest level of inventory that we've seen in the last 7 years, according to this data available on Reventure app. Going down this list, we have a smaller market in California coming in at number 3, Santa Maria, California, coming in at number 3. Then we have Gainesville, Florida at number 4. And then we have, of course, Orlando at number 5, everyone. Orlando, Florida, 82% year-over-year inventory growth. In terms of what that looks like, last year we only had 6,000 homes for sale in the Orlando metro. Now we have 11,000. This is unbelievable how much the inventory increased in just 1 year. When you see the inventory spike like this, everyone, if you see this in your city and zip code, it's telling you prices down. The Reventure app home price forecast score in Orlando, 39 of 100, saying that prices are going down over the next 6 to 12 months. But what's amazing, everyone, is the disconnect between the reality of what we're seeing in the data and what we're seeing on the ground in these local housing markets in Florida and Texas, and compared to what the sellers in these markets are still thinking. So here's the important thing to understand. While we started to see some substantial declines in prices on a lot of listings in Florida and Texas, the values overall are still very high. We have not seen this crash play out. We're only seeing the beginning stages of this crash occur right now over the last 3 to 6 months. It's only the beginning stages. And so I see a lot of people out there I see them like on my Twitter account when I tweet this data. Everyone they respond and they say like, "Oh no, prices are still going up in Florida and Texas. Like 2 months ago, I saw a report that said they were still up 1% year over year." Um, when people say that, everyone, they're really kind of looking at the past. They're looking at the fact that the prices went up 12 months ago or 9 months ago because there was a bit of an inventory shortage in the middle of 2023. That's not relevant anymore, everyone. What's relevant is the trends in inventory and price cuts today, and they're suggesting that values are going to have to drop by a lot. Like on this listing here, everyone, in Bradenton, Florida. Take a look at this listing. It's a 3-bed, 3-bath, 1,600 square feet. 599,000. I mean, I love the color here, everyone. I almost want to fly down to Tampa area and drive to Bradenton and just film a short in front of this house. Actually, this looks like an Airbnb now that I'm looking at this. Anytime you see the 2 beds in a house, that's usually the sign it's an Airbnb. Oh, and then they have like 4 or 5 lawn chairs. This is definitely an Airbnb. I'm curious, did they say short-term rental in the description? I mean, folks, I feel like some of these descriptions, you got to get a little shorter here with the descriptions because I can't even read any of this. It's just a bunch of words in caps, lots and lots of words. Anyway, I'm not sure if they advertise as a short-term rental. It looks like a short-term rental to me. It's been on the market for 140 days, only 42 saves on Zillow, not very good. What's this seller doing here? Well, they listed at 650,000 in February here in Bradenton, Florida, which was 120% more than what they bought it for in 2018. Looks like they did do some work on it, but still crazy, crazy appreciation here. They then had to cut the price 50,000 in March, and 4 months later, it's still sitting on the market. So this house is going to probably have another big price cut. I wouldn't be surprised if there's another $50,000 price cut, maybe even a bigger price cut than that going forward. And this is again a good indication of what's actually happening in these markets in Texas and Florida right now. The downturn is playing out, the inventory is spiking, the price cuts are spiking, and the sellers are reducing the price, in some cases by a lot. However, the values are still well above where they were before the pandemic. And that's a problem, everyone, because the affordability is still so bad in these states for local home buyers. And because the affordability is still so bad, we are not going to see buyer demand return anytime soon. And I say that not to be negative. I'm not trying to be overly negative on the housing market, especially if you're a realtor investor out there. I'm saying that to be realistic and pragmatic. The local home buyers in Texas and Florida can't even come close to affording or qualifying for the mortgages right now. And we can validate that here on Reventure app. If we go to a data point called mortgage payment as percentage of income, take a look at this, everyone. In Florida, the average household, the median household, has to spend 45% of their income on mortgage, taxes, and insurance. Everyone, before the pandemic, it was 21% of their income. Now it's 45% of their income. The last time we saw this was the 2006 bubble before the big crash. And so I'm telling you folks, this is not going to last. Local home buyers needing to spend 45% of their income to be able to qualify for or afford a house. It's not going to last. In Texas, we can see Texas is more affordable than Florida. The house payment ratio there is 36% as a percentage of income. So actually, the incomes in Texas are higher than Florida by $3,000, but the house payments are much lower. But still, we can see we've never seen anything like this in terms of Texas and its lack of affordability. The long-term average mortgage payment as a percentage of income in Texas is 23%. Today, it's 36%. And so you can access that data on Reventure app for yourself, everyone. You're going to want to know that mortgage payment ratio for your city and your county and how it's compared to over time. I think a lot of people are starting to make a big deal of the fact that the Federal Reserve is going to cut interest rates later this year. Seeing more and more news reports about this. And I talked about this in my video last week. Yeah, the economy is slowing, the inflation growth rate is slowing, the Fed is getting closer and closer to cutting rates. Wall Street Journal just reporting that Jerome Powell is signaling that a rate cut is coming into view, but declines to say when. So Powell just gave a speech, everyone, and he said that the data on price pressures between April and June do add some confidence to the idea that inflation is moderating. However, he's not going to send any signals one way or the other on any particular meeting on when they're going to cut rates. They're going to make the decisions meeting by meeting, with investors currently expecting the central bank to start reducing rates at its following gathering in September. All right, everyone. So the Fed has a meeting in July on July 30th and 31st. People are thinking the Fed's going to hold rates at that meeting, but then cut rates in September right before the election, which is an interesting thing to talk about in and of itself. Like, is the Fed actually going to cut rates 1 month or a month and a half before the election? I don't know. But either way, the betting markets are now suggesting 2 rate cuts this year, one in September and maybe one in December. Now, if the Fed does 2 rate cuts, that's going to bring the short-term Fed funds rate to 4.7 to 4.9%, and it's going to bring the mortgage rate down to 6.5%. And what I think a lot of people in the housing market are sorely mistaken on is what that's going to do to housing demand. Like, there's lots of people in the housing market analysis field who think that a mortgage rate going to 6.5 is somehow going to bring buyers back. And I have some bad news for anyone thinking that. It's not. And it's going to take a lot more than 2 rate cuts to change that. It's going to take huge increases in affordability. And I think we will see those increases in affordability occur over the next 1 to 2 years. And it's going to start in Texas and Florida, everyone. Those are the markets where the crash has undoubtedly started. Right now in Texas, everyone, 30% of sellers reduced the price in the most recent month, June 2024. You could see that's also the highest price cut rate that we've seen since 2017. So in Texas and in Florida, we have record price cut rate and record inventory. And in certain markets, everyone, it's starting to turn into a bloodbath, everyone. I mean, if we zoom in here, I'm just going to show you folks, like, again, Tampa, St. Pete, 38% of sellers reduced the price in June 2024. I mean, that's a price cut rate that we have not seen. This is the highest price cut rate in the last 7 years in Tampa, St. Pete, to go along with the highest inventory. And folks, actually just stick with me here. Even if you're not in Florida, I'm going to do a rapid fire round at the end of this video and tell you the cities that I think are most in the crosshairs of declining prices based on this data available on ReventureApp. So stick with me through this, because you need to understand what the data is saying for some of these markets, because it's turning into a bloodbath. Like I said, in Palm Bay, on the east coast of Florida, 33% of sellers reduced the price in June. That price cut rate is, you could see, the highest it's been since 2018, to go along with inventory that is now by far the highest on record. So again, folks, if you see this in your market, if you see in your zip code or county that the inventory is just going up like that, that is a signal. Prices down. And it might not happen immediately. You might not immediately see things get 25% cheaper, but that's the direction it's heading based on this surge in inventory. Another market I need to talk about, everyone's Miami. Because I was just in Miami. And this is such a big bubble, everyone. Home prices in Miami right now are 34% overvalued. And I think Miami is going to get hit by a brutal crash. And it's funny to me because there's still people in Miami who think that there's no way there's going to be a downturn. I was just in Miami for 2 weeks, and people, like every cab driver, every Uber driver, every local I talked to was just talking about like how the housing market's going to go up forever. But they're saying that just as the inventory levels are surging and the price cut levels are surging. Particularly if we take a look at the county view on ReventureApp, everyone. Make sure you look at the county by county view. You can see in Palm Beach County, we have a 26% price cut rate. That is the second highest price cut rate for the month of June going back 7 years. At the same time, the inventory has gone from 6,800 homes last year to 11,400 homes this year. So in terms of my projections for where prices are going to go down first in Southeast Florida, it's Palm Beach and Broward County. These markets are in decline already. Miami-Dade, still stable, but it won't be for long. And if you folks want an easier way to kind of understand the direction of your market, make sure to check out the ReventureApp Home Price Forecast Score, because this is a score available for you all on ReventureApp that kind of combines these metrics together on inventory and price cuts and days on the market and recent appreciation, and tells you, based on the combination of the underlying fundamental data, where we think prices are heading, suggesting when you see the blue, everyone, it suggests prices down. So in terms of looking at the county map of America, where do we see blue? Indicating forecasting down for prices. Well, we see it all across Florida. We see it all across Texas. We actually kind of see it in this kind of northern corridor up through Kansas and Nebraska into Colorado, everyone. I'm going to take a detour here to Colorado, we can see downward price pressure. Denver County, 29 out of 100 on the Reventure app home price forecast score. This is a market that was heavy sellers market 3 years ago. Now it's a heavy buyers market. Prices in Denver, they're going to be going down, as well as many of the surrounding areas in Colorado. We can also see, if we head down to Phoenix, Pinal County, Maricopa County, we have scores of around 30 to 40. These are declining markets. If we head up to Utah, we can see all across Utah, Reventure app is forecasting price declines. These markets are shifting down fast. So go to www.reventure.app and make sure to check out the home price forecast score for your area, the price cut rate, as well as how overvalued home prices are. These data points will really help you understand whether it's a good or bad idea to buy right now. You can access them under a premium plan. The cost is $39 a month. So go to Reventure app right now and access that data for your area, especially actually if you live in the Northeast and Midwest. We can see that these are areas where the home price forecast is positive. So we're actually seeing still upward price momentum in the Northeast and Midwest. You're going to want to see how your neighborhood looks on Reventure app. So go to www.reventure.app, sign up for a premium plan right now.